Hey everyone, this is an amazing interview with a real estate investor that built a seven-figure business so quickly that it literally broke everything in his business. He had to scale back down to right size it. Now he's dominating the market, and he's going to talk about things like the strategies that he's using to be more competitive and the things that investors need to do if they want to close more deals today in this competitive market, the things that they absolutely must do. Hope you enjoy. Hey everyone, I am very excited to be here with my buddy Mike Cowper. He's a phenomenal investor and very interested in having this conversation. It's been a while since we've connected with all the COVID craziness, so really excited. How you doing, Mike?
Hey, I'm doing really great, Chris. It's nice to kind of virtually see you again and reconnect, and hopefully can bring some value today.
Yeah. So if you don't know Mike, he's an investor, he's a realtor, he's a coach, and overall sales expert. And that's where a lot of my connections with him came early on. He's done like over 430 deals was the last note that I had. I'm sure you've done like way more than that since then. And you've been increasingly doing more on the coaching side, coaching other investors and entrepreneurs to build 6 and 7-figure businesses, which is what you did. And basically you're just coaching other entrepreneurs out there how to do what you did, right? That sum it up. Did I leave anything out?
No, I mean, I think you nailed it. But yeah, a quick summary on my background is I actually was in corporate sales when I first started dabbling in real estate. Had been doing that for quite a while, and just had the passion for real estate and wanted to get kind of that passive income, right? That's what I think is usually most of the entry point for a lot of people that are interested in this. They like the idea of time and financial freedom. By the whichever, I'm still chasing that. It's one of those, I don't want to say it's elusive, but it's one of those things that I'm always chasing because I want to keep adding value to my family and my friends, be able to do cool and new things. And sometimes that stretches what the number used to be to what it is now. But it's been really, really great. Like you said, I started off with, doing some small rentals and then ended up moving into the wholesale space because that one really just married up very well with my skill set. A lot of people don't think of acquisitions as sales. Sometimes, at least when they first get started. And really, it is a sales process. Now, you're actually buying something, but what we're selling as investors is the value that we can offer them and the solution to whatever their problem is. And you're using a lot of the sales skills to uncover that motivation, even though it's kind of a motivation about why they want to sell something and get rid of it versus trying to figure out those buying triggers. We're trying to understand and uncover selling triggers. So we did that, me and my partner, Mike Simmons, for about a year and a half. And we were doing good. We were in 6-figure land. I think we were around $300,000 or $400,000. And then we did what I suggest everybody does, and that's kind of join a group, whatever speaks to you and it's kind of in alignment with your goals. So we got into that and we were able to convert our business from a, $300,000 business to $1 million business within a year. And then as you kind of alluded to, I'll give you the Cliff Notes version and we can dig into whatever you want to a little bit later. But, we got too big too fast, had to, go through some tough months, some tough lessons. And ultimately at this point in time, now we have right-sized it. And maybe it was a blessing in disguise because we did all of that just before COVID hit. So we were kind of tuned up and ready for a lot of the adjustments that that were forced upon many people. We kind of had our setup in a positive structure, intentionally speaking, but it just happened to marry up well, if there's a silver lining to the whole lockdown that was, seen across the nation.
Yeah, right-sized it. I love that term. That needs to be a hashtag. In that mutual mastermind that we were in, and both you and your business partner talked about how you built this 7-figure business, but broke the machine in the process, which is good in a lot of ways. Also comes with a lot of pain points as you're like busting through walls, and basically anytime your business triples, most of your systems don't work anymore. You have to rebuild them because they weren't equipped for that type of volume or structure or process. So going from 6 to 7, especially that quickly, you went through multiple phases and you just skipped all of that, and you limped along and you made it. And then now you've right-sized it. So how would you go back and do you think it was, I guess the hindsight's always 2020, but if you could go back, would you build that differently, even though knowing that it may take you a little bit longer to get to the 7 figures And how did you eventually end up building it the right-sized way?
That's a fantastic question. And it's funny, I was just talking with Don Costa, my partner at Flip Talk Education, last weekend about that. It was one of the things we were kind of talking about is, would you change anything in the past? Now, it's easy to say now that I wouldn't have because, I made it through and I'm on the other side. But the other thing we were kind of talking about, and it's something I don't know the answer to, is would I have even listened? Right. And I think that's where a lot of people that when they're trying to look to start this and really build their business into something truly big is we're all looking at the rose-colored lens that people portray out there in social media, on Facebook, whatever it is, because the only thing that people want to share is the positive sides for the most part. I mean, there's people out there that are totally open and raw, but you don't hear about the downsides too often. And really a lot of the mistakes we came down to was exactly what you said. We tried growing too fast. We were chasing a number to be the biggest, investor in the room. We wanted to be the biggest this, the biggest that, the best this and best that. Well, there's a difference between being the biggest and being the best. And what we found was, we could generate big numbers, but to do that, we scaled so fast that just what you said, the systems and processes were broken. And we were just throwing patches on things and trying to herky jerk, put a lot of systems in place, put people in place. And, we had this big team, we had this big revenue, but at the end of the day, we weren't super profitable. There were times we weren't profitable at all. And that is an increasingly and incredibly stressful position that you can find yourself in. I've seen businesses scale themselves out of business because they try to grow too big, too fast. And what I would tell myself then is, you can't rush through the process. There is no get rich quick. I mean, for every one person, I think that really is that kind of like lightning in a bottle and find success really fast and it's sustained. I think there's probably 100 to 200 more people that, you don't hear about because of survivorship bias. You only hear about the successes. You don't hear about everyone that's failed.
Absolutely.
So yeah. And if it was to go back again, and still be the person I am today, I guess that's what the caveat that we had is we don't want to change who we are, who we became from the lessons we learned. But I would say be patient. It's a marathon, not a race. And you end up doing way more work and having way more stress if you don't, kind of almost organically and controllably grow your business, because it's just too easy to get out of your control. And it's too easy to try and, all of a sudden you have fires on all these different fronts and it's really hard to fight a battle, if you're trying to cover, 7 different angles.
Yeah. And you pointed out to the fact that what really matters is the bottom line. Like the top line, 7, 8 more figures. But at the end of the day, if you're not profitable, what's the point? And that strategy is going to be different if you're running like the Silicon Valley. You've got the next greatest trendy thing that's going to change the world, like Facebook or something. But when you're running a small, very localized business like real estate that's got a lot of risks, and you have your money on the line, and you're maybe a small team or even a solopreneur, it's a little different. And the stakes are higher for you personally. It comes down to, are you making money? And maybe doing 7 figures the way you did it before, or busting past through it, maybe that actually puts you in the red. Or you end up doing so much extra work for how much extra net in your pocket. Like if you could scale back and maintain a higher profitability, is that worth it for you? And for a lot of people, the answer is probably yes. The chasing the sexy, hey, I'm out there doing 10 deals a month and look at me on my boat or whatever. It seems very attractive, but when you get behind the scenes, there's a lot of headaches that come with that. Even for the ones that actually make it, there's still a lot of headaches.
And that's an incredibly valid point that most people don't see. Most people don't show behind the curtains. When you're running a big operation, that means you're not even really doing much investing anymore. You're managing people, you're managing a business, you're managing processes. And if you haven't ever done that before, I'll be the first to tell you, it's pretty different adjustment from running the numbers and working one-on-one with sellers or buyers. When you're trying to manage personalities and, get the most out of them, you don't even know what to actually ask them to do sometimes at first. You don't know how to properly communicate with them or set expectations or hold them accountable. It's a pretty steep learning curve. And then if you're trying to grow super fast and you're adding 1, 2, 3, 4, 5 people at the same time, what I've found is you end up not having enough time to dedicate to that person and dedicate to making sure it's done right. So one of the things that I really have been focused on, talking with different and new investors and people that are trying to stabilize or grow their businesses, make sure you get really good at the foundational stuff. And I think that gets lost because everyone wants to find the newest, shiniest object that it's the latest and greatest, can make you an overnight millionaire and not have to work sitting on a beach and Mai Tais and all of that. But really, the people that are the most successful, the ones that have been around for the most time and are the most wealthy, are most of the times the ones you have no idea who they are because they've been doing it. They have their system set up. They're not flashy about it. They've built the machine that suits their lifestyle. And that's really been my focus, especially when we partner up with Don, is how do we help people build a better business? And that just goes back to me realizing I was chasing a number and kind of other people's goals to try and feed my ego more than I was paying attention to what my goal was, which was more time and financial freedom to spend with my family, my friends, and have cool experiences. I mean, it went a year or two where I forgot to buy a rental or passive income property because I was so stressed out and so focused on trying to fix all of the problems that crept up when we were building our machine and the machine was running and you just had to keep finding what was breaking down.
Yeah, it's a car running downhill so fast that now one wheel's falling off and you got to go and repair that. Meanwhile, like the engine caught on fire and then like you've got some employees hanging out of the other half of the car. It's like all this stuff you got to do and still maintain direction, which is challenging. But so you talked about how you're just flying, just going, but at the end of the day, you realized at some point that you were building a company that wasn't necessarily aligned with your macro goal, the building more wealth and the passive income. It's like you're doing a lot of transactions and making money, but you have to keep doing that, right? And you were chasing someone else's dream, and that's a conversation I've had with other folks who've gone the scaling route, and then when they actually get there, we're like, I don't know that I like this. So working with a lot of investors and coaching with a lot of investors, I'm sure that's a short-term goal or maybe even desire for some, but how would you say that most of those investors would answer this question? What do you really want? You want to build a big company that has to, it's just blowing and going and doing all kinds of crazy numbers and stuff, but you're also really busy and stressed? Or you want to build a lifestyle business for your family to where if you want to take 3 months off, you can. And maybe you could even do that within the next 5 to 10 years. How do you think most investors would answer that?
I'm not sure how everyone would answer. I think it would probably have a few factors in there. Is it a person that's maybe single or doesn't have a family yet and is really driven? And I think people look at it through different lenses. So I would think that the people that, I don't want to generalize, but probably younger people or single people that don't, that really are trying to prove themselves and maybe get their life going in a certain way, they might answer the scale answer. I think once you get into it for a little while, or you have other responsibilities, you have other time commitments, they start looking at the second option. And what I find that most people over time start wanting to move into that financial and time passive income bucket, right? Where you're not accountable to anything. And, there's a lot of courses and things out there talking about wholesaling and how it's the new latest and greatest. Shoot, I remember back when I got started, it's how beginners were supposedly supposed to do it. You're only supposed to make $5,000 and you want to graduate to other things. Now I know most flippers are trying to turn into wholesalers. But the funny thing about it is I think people like the sizzle that comes with the steak, but the steak isn't great when you go all the way that route, because wholesaling is essentially a sales and marketing company. And it's a beast that needs to always be eating. And you never get off that treadmill unless you can successfully systematize it and hire out a lot of those processes. And the thing with most investing companies is it is a regional or a local thing for most businesses. And even the most successfully large ones, you run out of capacity at a certain point in each individual market. And you have to keep scaling up your operations over and over again. And if you start losing key people, then you're basically back at square one and you have to reinsert yourself. That's why getting the most passive income I can think of into my, income stream bucket is the most important to me now. And that's really why I've moved more into creative sales and things to kind of avoid costs. So I've been selling all my rentals on land contract to other investors because I don't want to deal with some of the costs that are associated with here in Michigan, as well as just the headache of having a tenant. Yeah,
and I think HGTV is a little default on the how alluring, or is that the right word? How sexy investing and wholesaling or flipping houses appears to, at least to the general public. But in any case, whether it's that or just the evolution of business, competition has gone up over the years, both local mom and pop folks just like us, and then some pretty sharp regional companies that have risen out of the ranks and grown, and they're just dominating, to your big gorillas, your Zillows, and which, I mean, Zillow's not flipping houses, but they do have at least an iBuyer program, and other iBuyers like Open Door, OfferPad, all which they're competing for leads and in the sales and marketing space for at least the cash close quick type of transaction. So from that competitive timeline that you've experienced and going through the weeds over the last few years, how has your sales and marketing strategy changed to maintain a value proposition that's going to allow you and your team to win?
What we have found to be the most successful is actually to have your eggs spread out across a few baskets. Now, I wouldn't advise that as you're getting started because you can't have that focused effort. But as you do start to build up a marketing budget and build up and working towards more consistency, being able to spread across a few, the most strategic marketing channels is, I think, the actual most effective model, because direct mail works sometimes. Cold calling works sometimes. Bandit signs work sometimes. Driving for dollars is one of those things where you always have to feed the beast and kind of, sort and sift through it. So online works sometimes. I really think when you can get to the point of being able to, leverage all of those at the same time is when you'll be the most consistent. But what I would caution people on is not losing track of your KPIs or key performance indicators. You've got to be able to know which ones are producing results. You need to start seeing when the ones that have been producing results start to drip down and maybe start to teeter off. Maybe you've hit a point of diminishing returns, and then figure out when it's time to kill one of those, or at least hit the pause button on them for a little while. I mean, we didn't send out mail for the entire first 5 months after COVID hit in February. Mm-hmm. We just got to save a huge amount of marketing expense there. And we got back to the basics. We worked our database. We cold called people that were in there. We started reaching out to people. Hey, what's going on? Are you guys need any help thinking about selling now that things have changed? So we spent a lot of time working through the leads we had already had. We spent a lot of time, trying to find potential distress points in sellers and, skip tracing those lists, and then trying to reach out to them directly through, phone calls, text messages, although that's becoming more of a gray area. And I don't know how long we're going to continue that or not. But, if people ask us to opt out, we always take them off our list and things like that. But the more you can, the thing that I learned is the more you can put yourselves in front of opportunity, the more success you find. And some of that means you've got to work hard and trade a lot of effort for those leads, or you trade money for your time back. And there's no right or wrong way. It just depends on which stage of investing you're at and what you have at your, disposal in terms of resources.
Yeah, like any other business, sales and marketing. I mean, it's all sales and marketing basically. And knowing your KPIs along the various channels that you're working on is going to allow you to adapt or maybe pull back like you did with direct mail early in the year. We've, at least in the Houston area, like the rentals we own, the amount of direct mail that we get on them is just massive. And not wanting to get lost in all the chaos, we've had to find other ways to get in front of eyeballs. So if someone was starting out, and I guess a caveat here is your market, everyone's market, it's going to be different. Like the Houston market's going to be different than maybe a small local community in flyover country, or if you're investing in San Diego, it's all going to be different. But what are maybe one or two channels that someone's starting out with a more limited budget, or maybe even no budget? What are some of those channels you'd recommend?
I mean, the two things that I think would probably be the most easy entry point, I mean, it takes a little bit of time and energy, is driving for dollars. People tend to get lazy and don't want to do the work. And I can't blame them, right? I don't want to go and drive for dollars anymore because I can afford the different marketing channels. But you are typically out, a little bit different now with COVID, but you're out in your car typically often a lot of times. And if you're already going to visit sellers and you already have appointments scheduled, why not block off a half hour before and after, or before or after, or 10 minutes and cruise around some neighborhoods? Now, there's certain things that you want to look out for on distress points. And you also want to make sure you're going to neighborhoods that have a higher likelihood of having those, types of distress points, right? For example, I'm not going to go to Detroit because I don't invest in Detroit, and I can find, 100 houses that would fit a distress signaling. But I'm also not going to go to, Rochester Hills, which is a really lush area where there's a very low chance of there being distressed homes. Yes, I might find one, but what we're trying to do is almost like the 80-20 rule. What is our highest likelihood of finding opportunity? Not looking for that diamond in the rough. So I think that driving for dollars is a great technique. It's pretty simple. You just find the houses that look like they either need a lot of work. There's city tags on the front door. Windows are boarded up. If you're in a snow state, and it snowed a week ago and there's no tire tracks in the driveway, signs of vacancy, signs of, that really downtrodden, not just kind of, it's a little bit disheveled and the roof is kind of peeling. Like that's not a driving for dollars lead, but finding those people and then just trying to stay in touch with them, reach out. I mean, you can look up most people's information on public record, which is accessible to everybody, what their, tax mailing address is. You can send a letter very cheap. You can either handwrite it or print something off and sign it and send it right from your house at night. You can also go one step further and use some free or cheap resources like, whitepages.com, or you can go to the level of skip tracing those people to find out what their phone number is and just give them a call. Say, hey, what's up, man? Saw your house. Thought I'd be interested in buying it. You have any interest in selling it? Like people sometimes overcomplicate it. We're not trying to convince anybody of anything. We're trying to find the people that are ready to raise their hand and sell their house. And I think sometimes that gets people in their head that they've got to try and convince or trick someone into doing something they don't want to. At the prospecting level, we're just trying to find opportunity and we're not trying to convince anybody of anything. We're looking for signs of motivation and seeing if we have an option to help them.
Yeah, having an open conversation with folks and just seeing where that leads.
Yeah, and I said the other way that you can go about this too is if you're going to have a little bit of a budget, I'd probably try to niche it down as easy as possible, right? A lot of us, as you scale up, you start going towards, you need bigger lists to mail to can generate the leads you want. So we've done a lot of equity mailings, but there's no true motivation signal there. What I would recommend for people getting started is really, the riches are in the niches. That's something that's been going around for quite some time. But, try and hit the notice of defaults or the pre-foreclosures or, divorces. Like try and find opportunities or probates. Find the opportunities that are out there that are part of public record that you can pull from your cities or your counties. And then same idea, you can send them a letter from the public records, or you can do some of the deeper levels interest of skip tracing or, identifying their contact information and just reach out directly. The reason I'm so interested in, mail, calls and texts and emails, if I can get them, is because everybody responds different ways, right? Think about yourself. Some people really only like to talk via text. Some people only like to talk via phone. Some people like to write letters. Don't know who those people are anymore, but there is a segment of people out there, right? So, if we can hit them from all different angles, we're again increasing our opportunity for people we've already identified as in areas that we're wanting to buy. And then now we're going to try and communicate with them in whatever method works best for them.
Yeah, the omnichannel approach to where even if you hit them through direct mail, just that psychological branding as it sinks in, and then now you're everywhere when that thought comes across their mind, you're now the solution. So I like that. And that's something that we've been doing. One extra thing on the niches that came to mind was having a niche list, great, but also thinking about having a niche value proposition. So one of the things I've been telling folks, and you can let me know your thoughts on this, is I'll ask this to a room. I said, hey, who here can offer quick cash closing a week or two? Like everyone raising their hand. So it was like, okay, how are any of you different than the other person then? So what value proposition can you now offer that's different from the other person? Do you have any thoughts on that?
Yeah. So part of the reason we, I think, set ourselves apart is, especially over the past year, I've evolved in being able to make more creative offers. So buying houses on terms. The other, value proposition we have is I can typically pay more money than most people, because I know our buyers list is way stronger than everybody else's in our market. Maybe there's one or two that have a similar level as ours. But when you have that kind of reach and married up with this kind of market, we have buyers paying a lot of money for houses. And, it kind of comes with that supply and demand. But in terms of other value propositions that we offer that maybe not everyone does, is we have a dedicated team to, once we sign this agreement, one, you can call me whenever you want or whoever signed the agreement. And you're also going to have our dispositions manager hold your hand through the entire title process. We're going to do everything for you. The only time we'll ask you for anything is if it's something specifically from you that you need to get us or need to sign on their behalf, and then just show up for closing. So we try to really be a concierge, not only on the front end, but also on the back end, to make sure that, a lot of people don't buy and sell houses a whole lot. And if they're selling to us, there's oftentimes a distress point. So we don't want to add to that level of stress anymore. And I think part of our value that we add is we kind of communicate that to them. We put them at ease. And, a lot of people, I think, make the mistake of going out there going, I can pay this, take it or leave it, right? They try and use that old, used car salesman technique. And while it does work on certain people, most of the time, that's not a great experience for them. And as I've been in this business longer, it's strange. I didn't think that referral business and distressed homes would be a big thing. But if you help enough people, you start finding people that are connected to networks of distress. Like I'm working with a nurse that helps people transition to senior living facilities. Well, that is now a great relationship because I treated someone well. I didn't even buy their house.
Love it. You said something too that it just popped in my mind as you can pay more than other folks because you have better systems in place. You've got better resources to monetize that lead. And what popped to mind is something Russell Brunson had said in a podcast a while back is, and I really think this was advice that he had gotten from maybe Jay Abraham or one of the other like marketing gurus, in the sense that the business that's the most successful is the one that can pay the most for the lead, because you can pay the most for the lead. You end up squeezing out a lot of your competitions over time, and you can still maintain profit margin because you've got unique ways to monetizing them. So having, and that for you and for other wholesalers is having a very robust and deep list of buyers ready to pay, in my opinion, crazy amounts for real estate. But hey, that's the market. That's the market we're given, and you're playing it well.
Yeah. I mean, I hope none of our buyers are listening to this, but I don't know how some of you make money. I've run the numbers. It doesn't pencil out for me. I hope you have an awesome exit strategy that I'm going to pay attention to later. But yeah, I don't know if they're betting on appreciation again, or they're just willing to break even. Because I've had people, some of our buyers have told us that we don't have deals. I don't want to lose my crew. We'll work for, break even margins just to keep them busy. So, sometimes there's dangerous different things. Oh yes. I wouldn't want to not run my business that way. But at the end of the day, it's not my job to run their business. And if their check clears at closing, that's what matters as a wholesaler. And, then the seller has gotten what they wanted. The buyer's gotten what they wanted. We got what we wanted. So you got your triple win.
Yeah, another investor told me, this guy's bought like 1,500 houses. He was like, my job is not to be their financial advisor. My job is disclosure. We'll disclose what we need to disclose, and otherwise, good luck, man. But I think a lot of them, the investors that are paying the higher amounts, not all of them, some of them are probably running themselves out of business. Maybe some faster or slower or faster, but the buy and hold investor, especially with Wall Street money getting behind some of the long-term products for investors, being able to finance properties at even rental properties as low as I was quoted 3.875% or something for a 30-year investor loan with no prepayment penalty. It's just nuts. So I think some investors have just that long-term play. I like buying at a bigger discount, but I mean, you can go for it.
I mean, that's a great point. And that's actually one of the other reasons when I moved into creative, and you've got to look at it from not necessarily other people's lenses, but the people that can figure out ways to pivot and take advantage of any kind of market are the ones that tend to be the most successful. And if you're okay with, you don't need a ton of cash flow, I would never advise anyone not to have a cushion on a rental property. But if you can secure 30-year term and you're okay with only cash flow and maybe a couple $100 a month and, cover things when they break, if you're playing the long game, in 30 years, you have a paid off house that becomes incredibly profitable all of a sudden. Yeah. And your tenant's paying it down for you. And then you also get the other benefits of depreciation and things like that. The other thing that I've been doing a lot lately is if I can get a house, even without a huge discount, I can then go sell it to an owner occupant or another investor on, creative terms, seller financing. And, I follow all the proper steps. I get them underwritten and all of that stuff. But now I can charge a higher interest rate than what I'm being charged by my private money. The people that I work with that fund my deals, because they don't want to be in the stock market right now. They're just always looking for, hey, I like a house that I can take back if Mike doesn't pay me. Oh, by the way, Mike always pays, that kind of thing. But now say I'm getting, 5, 6, 7% interest rates, depending on what the deal is or how long I've worked with them. Well, if I can go then turn around and sell it for 10 grand more on a 30-year note, but charge 9%, I'm getting 2% arbitrage over the entire time and paying that thing down. And I'm accelerating the principal pay down on one versus the other. Mm-hmm. So there's creative ways they can start to build in margin into some deals. And the cool thing that I found, at least in my market, is there's this little no man's land that's really challenging for buyers that are landlords to buy because it's a little bit too high for a passive income, but it's a little bit too low for a flip profit. So that's kind of a sweet spot where it's a low enough risk to buy in and sell it on terms. And now I've created margin there and helping someone that maybe qualified January, but doesn't qualify now. I heard a stat that 30% of people no longer qualify for a mortgage that did in January. So these aren't bad people. These aren't people that don't want to repay their loans. They just no longer qualify for traditional bank because they raised the minimum credit score to like 700 or something crazy. But don't quote me on that.
Yeah, or they took a forbearance and now that kind of killed them. Which, I mean, we'll see what the government does with all that. But yeah, I like it. So essentially, you've pivoted with the market to maintain a competitive edge and allow you to do deals that you otherwise, using the old strategy, may not have been able to do. But now you're able to continue doing them or do maybe even more and maintain margin or increase your margin. Whereas others that are doing the same old thing, like the who moved my cheese, they get starved or they complain or who knows, they get left behind.
Yeah, I totally agree. And, the thing is, and we've talked about a little bit in the beginning, is figure out what you need and then make sure it's really airtight or close enough to it. And then start looking at growing, because we've become way more profitable with a smaller team with doing less marketing. And it's easier to manage and pay attention to things at a smaller base than if you're really scaled up, because you're not tracking as many things. So then you can see when something's off a little bit sooner. You can start figuring out where to lean into a little bit more. And that's really one of the beauties that I found of going smaller. And I have less people to manage. Some people are built to manage people. I like to coach people that are driven, that are going to take what I tell them and some of the advice that's given and go and run with it and then come back and ask questions when they need clarity. I don't know why, but everybody I've hired, they just sit there and say everything's great until I get so frustrated with their lack of performance that I just fire everyone.
I laugh because that's my experience. I seriously feel sorry for most of the people that we've hired because I'm a horrible manager. And I learned that about myself. You'd recommended a podcast, Manager Tools, which I don't know if it's still a podcast, but it helped me develop a lot. But just my wife's much better at it than I am, and she'd end up having to clean a lot of the fires that I would cause. But in any case, all right. So you've got a tremendous, like a huge sales background, and you've leveraged that into real estate. And in the prior group that we were a part of, you were, at least amongst a lot of the other investors, you were the guy to go to for sales training, advice, and guidance and coaching. So from a sales perspective, what are like one or two things that investors should be doing to help them close more deals?
This is going to sound like a simple one, or at least it sounds simple to me because I've been talking about it so long, is really being able to ask good questions and then listen. I think a lot of us, especially if we're just getting started or we're uncertain of ourselves or our businesses at that point, we do what a lot of salespeople tend to do is they want to go and almost kind of show off. I have this presentation, I have this information, and you're going to listen to it whether you like it or not. But a good salesperson understands what they're going to do and how they can help them. But in order to really help somebody, you've got to understand what they need help with. So being able to probe and ask people questions about what the situation is, what's going on, attentively listening to them, and then reacting and following up on their response, it allows us to really paint a good picture of what's going on with this person, some of the areas that they have the most frustration. And then when we make them an offer, we can curate that offer to solve those problems for them. Because when you're selling a house, it's not the house that's the problem. There's something else that's going on that's the problem, whether it be monetary, maybe it's life things, who knows what it can be, because really you've got to treat every seller differently. There's general questions we can ask, there's general formats we can follow, but every single seller is unique. None of them are the exact same. They're all like snowflakes. Like we're all individual humans. They're all individual humans as well. They all have their own individual situations. And if we try to make too many assumptions, we're going to miss out on some very great information that allows us to present our offer, even if it's the same as everybody else's. We can present it in an offer that really ties to them and builds trust. Because people buy/sell from people they trust and have confidence in. And the more we know about them and can tailor our solution to their particular situation, the more trust and confidence they're going to have to go with us, especially if it's a competitive situation and especially if the numbers are already close.
Yeah, it's like a coach going up to a player, telling them what they need to do to improve catching the ball or running the ball or blocking a ball. And then after 10 minutes, The player goes, I'm a third string lineman. Knowing the problem you're trying to solve and without listening and or Chris Voss, like tactical empathy, you may be trying to solve a problem that they don't have. Maybe they don't need cash now, quick. So what percentage would you say, in just rough ballpark, of sellers that you interact with that actually need cash now, like they've just got to sell?
I mean, not as often as you would think. Like they might be in a distress point, but it's not fire sale time, like where they have to have that money in 7 days or less. We encounter them, but I would have to say it's probably 10% or less. And I'd actually almost venture to say it's probably 5% or less that's actually where they need it that second. Because I mean, if you need it that second, those are typically the best deals because, in order to make money move that quickly, it's got to be a good enough price that it makes sense to, get all of the, wheels in motion to make that happen. Because if that's the case, right, we've got to get our title company to make sure, or attorney, to make sure they can get on title right away and have it closed and clear their books. We got to get the money in place if we're buying it ourselves, or find the buyer to put their funds in place. And sometimes to get them to move fast enough, we've got to offer it to them at an even more discount than we normally would if we had time for it. But how often it happens, it's not as regular as you would think. And that's a good point to make, because everyone thinks they have to have this thing sold in 4 days or less, but that's not true.
No. And if you said 5, maybe 10% or less, who knows, but it's small. And the point I was driving, which, I mean, you elaborated on, is if you go in and that's the problem you're trying to solve, because that's your sales script, they may tune you out, or they may put less emphasis on the relationship you're really building with them. And you're going to go with someone like you who's actually going to spend time and have a conversation. And then you realize that, hey, they don't really need cash. They actually just need help getting the family member who's still in there out. And at that point, but they also need, they don't want to sell now. They want to make sure they sell on January 1st because they don't want the capital gains to hit on this tax year. Or they want it to hit next tax year. Any one of the many other value points that are pain points that they may have that's not necessarily financial related.
That's so true. And you could also be putting undue stress on yourselves. Don't forget, people that are out there watching and listening to this is our business too. And we don't have to cowtail to sellers, right? We want to work with them, but it's got to be a win-win. And sometimes I think, especially as people are getting started, or if you're in a survival mode position in your business, we almost give up all of our power. And I'm not saying that in like a dominance way or anything that's, negative, but remember, it's got to be a good fit. Otherwise, you're going to end up spending a lot of time, have a lot of stress, and then probably not making as much as you normally think. Right? If I think I'm gonna make $100,000, yeah, I'll get drugged through mud for a little while. But if it always seems to be the ones that are the biggest problems, or we're adding the most stress to ourselves, it's like for the $500 to $1,000 deal, and we're just doing it because we're people of our word. We want to make sure we get deals closed for these sellers, but they always tend to give us the most problems. So at times it might not make sense to even work with certain sellers. I fired sellers before just because they were too challenging to deal with. And remember that this is our business and we get to run it the way we want to. And I think people lose sight of that sometimes.
Yeah. And that problem is going to be pretty difficult for newer investors to manage. Once you get a few of those sellers that you would love to or need to fire, the self-education becomes, it soaks in quickly.
Yeah. I'll just plant that seed. So when you get to that point, then just be ready and know that you can fire sellers. You don't have to work with everybody.
Yeah. You're like, oh my gosh, he's calling me again. All right. So this has been great. Is there anything else you want to add on anything we've touched on, or just anything else?
The only thing I always like to try and make sure I put out there is that, this business, it's simple, but that doesn't mean that it's easy. And if you do the right things and you stay after it and you surround yourself with the right people, you educate yourself through free resources or paid resources, whatever you can afford and makes sense for you and your lifestyle, this can be done, and people are doing it every day, but it's hard. And you're going to have mistakes. You're going to have failures, and it's normal and it's okay. I don't want you to think that everyone goes through with rainbows and it's always easy. I just shared a big struggle that we had. I know that Chris has had up and downs. I know everybody that I've ever talked to has had ups and downs. Now, not everyone's always open about sharing that because it's kind of challenging and sometimes embarrassing, but I'm okay with that because I don't want you to give up because it gets tough. it's only a failure if you stop moving forward.
Yeah, the perfect business is the business you don't know very well. It's that one it's portrayed on their Facebook, but you haven't actually sat in on the office meetings and been on the appointments with them. Okay, so how can folks reach out to you or get connected with you?
I'm actually on all the social medias: Facebook, Instagram, LinkedIn, at the Mike Cowper. If you want to send me an email, it's mike@fliptalk.com. I'm checking all my emails. I might be looking to get an assistant at some point to maybe at least clean up the spam stuff. But if anyone wants to reach out, I love to help. I get a ton of help from people, and I've gotten a ton of help. I've given a lot of it as well. And I just found that, I'm always trying to learn from somebody that's further ahead from me, kind of commiserate with the people that are the same level as me, and then try to help those behind me. And it really does help me learn and grow as a person. And, don't be afraid to reach out. This offer doesn't get taken advantage of as often as you might think. So don't be shy to reach out.
Awesome. Love it. Hey, I appreciate it. Look forward to connecting with you again soon.
Absolutely. Thanks for having me on, Chris.
Take care.